we want you to know.
The latest inflation data in the United States has once again drawn the attention of policymakers, economists, businesses, and ordinary citizens, because it serves as one of the clearest indicators of the economic health of the nation, and its implications are far-reaching, affecting everything from interest rates and stock markets to wages, household budgets, and even political debates. When inflation numbers are released by the Bureau of Labor Statistics, they are often boiled down into a simple percentage that shows the year-over-year change in the Consumer Price Index, CPI. But behind that number lies a complex picture of supply and demand dynamics, government policy, global pressures, and the lived experience of millions of Americans. So when the most recent data shows inflation either cooling, stabilizing, or remaining sticky, analysts immediately begin to ask what it really means for the broader economy. If inflation is easing, as recent reports have suggested in certain categories like energy or durable goods, it indicates that the Federal Reserve and its aggressive campaign of raising interest rates may be having its intended effect of slowing demand without entirely halting growth, which is a delicate balance since the Fed's dual mandate is to promote maximum employment while maintaining stable prices, and a sustained slowdown in inflation could signal that the Fed is closer to ending or even reversing rate hikes, a move that would have ripple effects across mortgage rates, credit card interest, business investment decisions, and stock valuations. But if inflation remains stubbornly high in categories like food, housing, or healthcare, it means that ordinary Americans will continue to feel squeezed, with paychecks not stretching as far and savings being eroded, fueling frustration and sometimes political backlash. The details of the report matter greatly because headline inflation, which includes volatile categories like food and energy, can look very different from core inflation, which strips those out to provide a clearer picture of underlying trends, and often it is core inflation that the Fed watches most closely, since spikes in oil prices or temporary food shortages can distort the headline number without indicating deeper systemic price pressures. So when we parse the data, it is important to ask not just whether inflation is high or low, but where it is high, and what those categories mean for long-term stability. Housing costs, for example, make up a significant portion of the CPI, and as long as rents remain elevated, overall inflation tends to remain sticky, even if other goods see price relief, while used car prices, energy swings, or supply chain disruptions can create short-term volatility but may fade over time. The significance of the latest data also lies in how it affects expectations, because inflation is not just an economic phenomenon, but also a psychological one, where businesses set prices and workers demand wages based on what they expect inflation to be in the future. And if inflation expectations remain anchored, meaning people trust that the Fed will eventually bring inflation down, then the cycle can stabilize. But if expectations rise, it risks creating a self-fulfilling spiral where prices and wages keep pushing each other upward. The political implications are just as important, because with elections approaching, inflation data becomes a central talking point, with the party in power emphasizing signs of cooling as proof of responsible stewardship and the opposition highlighting persistent pain in food, gas, and rent costs as evidence of policy failure. And because inflation is one of the most tangible economic experiences for voters, more so than GDP growth or stock market indexes, it often has a powerful influence on political sentiment. Globally, U.S. inflation data is significant as well, because the U.S. dollar serves as the world's reserve currency, and when the Fed tightens policy to fight inflation, it often strengthens the dollar, making imports cheaper for the U.S., but raising borrowing costs for emerging markets that rely on dollar-denominated debt. So the ripple effects of a single report extend far beyond American borders, shaping trade, investment, and even geopolitical balances. For businesses, the implications vary by sector, since retailers may welcome signs of cooling inflation as consumers regain purchasing power, while financial firms may brace for lower interest margins if the Fed pivots. and energy companies may be impacted by shifting demand as prices stabilize. While for households, the immediate concern is whether essentials like groceries, housing, and healthcare are becoming more affordable or continuing to climb, which often determines consumer confidence and spending habits. In a broader sense, the latest inflation data is a reminder of the delicate balancing act facing the U.S. economy as policymakers seek to tame price growth without triggering a recession, a task made even more difficult by global uncertainties such as ongoing supply chain adjustments, geopolitical tensions like the Russia-Ukraine war, and climate-related disruptions that can impact food and energy supplies. Thus, when we ask what the latest inflation numbers mean, the answer is multi-layered. They mean something for financial markets, which may rally or retreat depending on whether they interpret the data as hawkish or dovish for Fed policy. They mean something for businesses, which adjust their strategies in pricing, investment, and hiring. They mean something for workers, who measure whether wage gains are keeping pace with rising costs. They mean something for policymakers, who must decide whether to stay the course or change direction. And they mean something for families, who simply want to know if life will feel a little less expensive in the coming months. Ultimately, the significance of the data depends on the trajectory it suggests. Whether inflation is on a sustainable downward path toward the Fed's 2% target, or whether it remains stuck above comfortable levels, risking prolonged hardship and potentially forcing further tightening. And as analysts pore over the numbers, one thing remains clear. Inflation is not just about abstract figures, but about real lives, shaping the cost of groceries, the price of gas, the affordability of rent, and the security of retirement savings. So the latest report is not just an economic update, but a reflection of how Americans are living day to day. And it is why the question, "What does it mean?" will continue to be asked every time new data is released, because the answer carries consequences for nearly every aspect of modern life, from the choices made on Wall Street to the struggles felt on Main Street. And understanding its nuances helps us navigate the uncertain but vital path towards stability and growth.